All right, traders, let's get started with strategies. So the first thing we need to understand before we can start writing our scripts is how the strategy annotation function behaves. So that's what this particular video is going to focus on. We're not going to write any code. We're just going to focus on all of these parameters we have to work with. And there are a lot of them. Now, the reason why there are so many is because the strategy annotation function contains all of the same parameters as the indicator annotation function. So I won't cover any of the parameters that are duplicates because you can go and watch the indicator annotation function if you want to know what some of these other ones do. So with that said, let's get started breaking down the strategy parameters. If you hold down Control and click on this function name, we'll get the documentation for all of these and a detailed description for each parameter. But I'll do my best to summarize and walk you through them really quickly in this video. So let's get started by titling our script. And now for today's lesson, I'm going to do something I don't normally do, which is split our strategy function across multiple lines just so that we can see each parameter as we're working with it. So we have our title. We have a bunch of other parameters there: short title, overlay, format. We have precision, decimal precision, and all of the standard indicator parameters. The first one on this list that is not standard to the indicator function is pyramiding. So pyramiding is an integer parameter, and it specifies how many trades you can have open in any given direction at the same time. So pyramiding is literally just pyramiding trade on trade on trade. If you're unfamiliar with that technique in trading, I suggest you Google it. But personally, I don't use pyramiding in my scripts, at least not in my automated scripts. Sometimes I use it in my discretionary trading to ride a long-term trend, for example. But in my strategy scripts, I try to keep things simple. I don't usually use pyramiding. By default, pyramiding is set to 0. So you can only have one trade open in any direction, long or short. If you set this to 2, then we can have 2 trades trading in the same direction. Now, before I continue, I should mention that most of these function parameters can be manually toggled in the settings menu under properties. So if your script has inputs, you'll have the input tab here. Because I haven't got any input code here, it defaults straight to the property tab or properties tab. This is where you can set up a lot of these parameters that we are going to work through today, such as commission, verifying price for limit orders, slippage, simulation, our margin amounts for long and shorts, and some of our recalculation options. But obviously we can override those default settings with these parameters. That's the purpose of these parameters. So we have pyramiding. The next one is calc. Calc on order fills. Now, I already went over what this does in the introduction to strategies. But basically, how the TradingView strategy tester system works is that on all of our historical bars, when our script code runs, let's say we had a, let me find a big bar here. This is a great example. So this bar right here, this big green hammer looking candle, let's say that we went long here and our take profit was here and our stop loss was down here. The way that the strategy tester system works is it will simulate historical data through the broker emulator. So what the broker emulator does is it emulates how price action might have unfolded in this bar. It's not perfect. If you haven't watched the introduction to strategies, I highly encourage you to go and watch that because I do cover some of the hidden risks with the broker emulator that you need to be aware of. One of those risks is that depending on how the bar plays out or prints onto your chart, that will affect how the broker emulator simulates that intra-bar price action. So this bar obviously opened down here, rallied all the way up here, and then came down and closed down here. So in this case, on this bar, I would assume that the emulator would behave like this. The bar opened here. We know that for a fact. What we don't know is, did it rally up here or down here first? The emulator is going to simulate that price action went down to this low and then up to this high and then down to the close. However, it's possible that this bar actually played out in the opposite direction. We opened here, we rallied all the way up here, we fell all the way down here, and then we rallied and closed here. It's unlikely that that happened, just given the structure of this candlestick, but it is possible. So it's important to remember that the broker emulator simulates that intra-bar price action. The only way to confirm what happened on this intra-bar price action is to use the bar replay tool and drop down to a lower time frame, like a 5-minute chart, for example. It helps to mark the open and close of the bar you want to analyze. If we drop down to a 5-minute, chart, you can see that on this 5-minute chart, I'm guessing this is 8 a.m. bar. So the bar opened here, and in fact, it did play out in the opposite direction to what I thought it did. We had this little fall down here, then this big spike up here, and then we came down, made our low on that 1 hour bar, and then we rallied up here again into this wick, and then closed down here. So this is telling a very different story to what the broker emulator system would simulate on this particular bar. So for example, if we had gone long at the close of this red bar and the open of this green bar, and we had our stop loss right down here at the low of this wick, and our take profit up here somewhere, this would have actually been a winning trade, even though the broker emulator probably would have simulated this as a losing trade. Now that's not usually a problem when you get a false positive and a trade is counted as a losing trade instead of a winning trade. That is obviously much better than the emulator counting a losing trade as a winning trade and giving you false hope in your strategy. It's better to have a strategy that slightly underperforms in the broker emulator than a strategy that significantly overperforms reality. But anyway, that was a bit of a digression from what I want to mention about this calc on order fills. How this calc on order fills works is, if we were to go long on this bar, on the open of this bar, and as I said, we had our take profit up here and our stop loss down here somewhere. So how the strategy tester will work on a particular bar like this is, if we entered long at the open of this green bar for whatever reason, and our stop loss was down here and our take profit was up here, the emulator system, the broker emulator, would enter long on this green bar, but it would not check our take profit and our stop loss until the next bar. And so even though our take profit was hit on our entry bar, it will not be filled until this bar here. And if this bar did not exceed our take profit, then this trade would not be counted as a win. So this can be a problem, especially on these lower time frames. On the daily and weekly and 4-hour chart, this sort of occurrence is much less common. But on these lower time frames, having large wick and large spikes in volatility is a frequent occurrence. And so on these lower time frames, you will often need to set calc on order fills to true. That way, the script will recalculate after the order is filled, and it will check its take profit and stop loss on this same bar. Now the catch with this, obviously, or maybe not obviously, especially the previous video, is that setting calc on order fills to true gives our script access to information it shouldn't know. So what I mean by that is, if we set calc on order fills to true, and we enter long on the open of this green bar, we can also check what the high and the low was of that same entry bar, and we can use that information to cheat. So for example, we could set our take profit at the high of the bar, and we could get perfect fills on every bar that we enter on at the high of that bar. That's obviously cheating. You need to code your script in order to do that, but obviously it's not a good idea to do that because that's cheating. You're going to get false results. You're going to lose money when you go to trade that script. But this calc on order fills parameter is very important on some scripts, as I mentioned. For example, let me throw on one of the strategies we're going to create in a lesson to come, which is my FTB strategy, or Jason Greystone's follow the bear strategy. If I throw this script on and I zoom out, let's find an example where our take profit was hit on the same bar that we entered on. That's the only time this calc on order fills is an issue. So here's a good example right here. This is our signal candle. This generates our short order, the command to go short, but it doesn't happen until this bar closes and we enter short on the next bar. So this bar here is where our short trade is executed. Our stop loss is up here and our take profit is down here. Our take profit was hit on the same bar that our entry order was initialized on. If I come up to the settings menu of this script and I turn off recalculate after order is filled, watch what happens here. Our take profit has now been moved to the next bar. So what's happening here is our signal is being detected on this bar. At the close of this bar and the open of the next bar, we go short. Our take profit is down here, but our take profit is not triggered until this bar because the strategy emulator, the broker emulator system, by default does not calculate more than once per bar. And so I needed to turn recalculate after order is filled to true by default on my script, on most of my scripts actually, especially these lower time frame scripts, so that our take profit can be hit on the same bar that we enter short on or long on. If the this trade played out in the opposite direction, it's the same issue. So anyway, that's a long explanation, but this is an important parameter. I need to take the time to explain this one because this is one of the parameters out of this list that is extremely important. Most of the other ones aren't that important because they're just things like setting your account balance, commission slippage, currency. But anyway, let's move on to the next strategy parameter, which is calc on every tick. So by default, the strategy scripts do not recalculate on every tick, every price tick. Now this only applies to real-time bars. So on historical bars, the script will only execute once per bar, unless you turn recalculate after order is filled to on, then it will calculate twice per bar, only on those bars where an order is filled. But on a real-time bar, the emulator system behaves exactly the same. It doesn't actually execute your orders until the bar closes. The script doesn't actually run on every tick unless you tell it to. And so this only applies to real-time bars, recalculate on every tick. So let's do an example here. Let's change the background color. If the close is greater than the open, let's set it to color.green. Otherwise, let's set it to color.red. Let's set calc on every tick to false. Save our code. I need to put a comma in there. I don't know how that got deleted. But now you can see if I zoom in here, all of our bars here are changing color based on whether the bar was green or red, except on the current bar. If I hover over the current bar, we have no background color for this current bar because we do not have recalculate on every tick turned on. If I turn this on, now we get that green background because the script is recalculating every time price moves or volume is received, volume data. Now, personally, I strongly encourage you to only write strategy scripts that execute orders based on confirmed candlestick data, candle closes. If you need to enter or exit a position, you should use either fixed take profits and fixed stop losses, or you should make your trading decisions, your execution decisions based on candle closes. So I would encourage you to leave this as false by default, which it is by default. But if you do need to recalculate your script, to run your script and execute your code on every price tick for whatever reason, there are some reasons why you might want this, then that is how you can turn it on by default, by setting calc on every tick to true. Moving on, now I'm going to skip over some of these like max bars back, since that is also applicable to indicators. You can watch the indicator annotation function lesson to learn about that. It's pretty self-explanatory, that one. But the next one is backtest fill limits assumption. A ridiculous name for this parameter. I'm not sure why they called it that. But basically what that means is if you set that to 1, that means that when you have a limit order, like a take profit or a stop loss on your chart, for example, then if you set, backtest fill limits assumption to 1, then that means that price must be at least one minimum price tick above or below that limit order. So if you have a take profit at, let's use an even number, for example, to make it easier, 1.136. So if you've got a limit order at 1.136 to exit a long trade, so to sell, then price must be at 1.13601 in order to execute that order. If you set, what was it called again? Backtest fill limits assumption, stupid name, to 1. Now this means that, let me get rid of these ridiculous colors as well. Now this means that our price action must exceed our limit orders by at least one minimum price tick in order to be filled. So on Forex, that's 1 pip. On other markets, it could be like, for example, on stock markets, you might have a minimum price movement of 0.25. Then this would just multiply that minimum price movement. So if it was 0.25 was your minimum price movement, then setting this to 1 would mean that price would need to exceed your limit orders by 0.25. If you set it to 2, then it needs to be 0.5. It needs to exceed by 0.5. So that's what that does. I don't normally mess with that personally, because when I'm writing my scripts, I prefer to manually account for things like spread. Depending on the market I'm trading, I'll analyze my average spread through my broker, and I'll take that into consideration with my test results. Usually I will export my results into Excel. I'll go over every single trade that my script takes manually to confirm, 1, that my script's working properly, and 2, that it isn't a common occurrence that spread could be an issue. So on a 5-minute time frame, basically, I just don't bother with that, at least not with the way I trade, because I know that spread is going to be a big problem. Maybe not on euro dollar, but definitely on other markets like the exotic pairs, or on a pair with a big spread like pound yen. I won't bother with those lower time frames. 1 hour is typically as low as I go, especially with my automated scripts, because that means that spread becomes less and less of an issue. But anyway, if you do want to simulate spread, that is the parameter to play with. Backtest, fill limits, assumption. Moving on, we have default quantity type. This is what it sounds like. If we open up the properties menu here and we look at this option here, default quantity type is your position size. So by default, it's set to contracts or lots or units. So in the case of Forex, one contract would be 1 unit. So to have a standard lot, you would need to set this to 100,000. On Oanda, this broker data feed I have loaded now, we can actually use units. So you could trade 1 unit if you wanted to of whatever currency you have set your base currency of. It will trade 1 unit of that if this is set to contracts. You can also set it to $1 or 1% of your total account balance. Now, 1% of equity is not risking 1% of your account balance based on your stop loss. It's simply buying 1% worth of whatever market you're on. So this is a big problem for Forex and crypto traders. If you want to risk 1% of your account balance per trade based on a dynamic stop loss distance, we need to manually code that into our scripts. But don't worry, I'll show you how to do that in the lessons to come. But anyway, you can change the default quantity type in your strategy function. If I hold down Control and click on this, I'm not sure what it takes. I'm guessing some sort of built-in, click on that, sorry. I think it takes some sort of built-in constant. So default quantity type, yeah, constant string. So strategy.fixed, strategy.cash, or strategy.percentage of equity. So fixed is just a fixed position size, and that's what it is by default. So if I set this to strategy.equity, percent of equity, now our default quantity type is going to be a percentage of our total equity. Moving on, we then have the default quantity value or position size. So default quantity value is 1 by default, but we could set this, for example, to a standard lot, so 100,000, and change this back to fixed. Now we are trading a 1 standard lot per trade by default, but the user can obviously come up to the settings menu and change this data if they want to. Notice that we have pyramiding set to 2 orders. We have our default quantity of contracts set to 100,000, and our strategy quantity type is set to contracts or fixed. Moving on, the next parameter we have is initial capital, which does exactly what you think it would. If I set this to 1,000,000, it'd be nice to have $1 million to play around with the strategy. So let's simulate what that would be like. Open up the settings menu. We now have $1 million of initial capital in our script. Moving on, we then have currency. So that's the base currency of your strategy, I believe. So by default, it's set to default, which is, I guess, the quote currency or the main currency of the market you've loaded. Let's check that. Open up the settings menu. Base currency is set to default. We can set this to any of these currencies here by changing currency, the currency parameter, to currency.control space. Here is a list of currencies we can choose from. Let's change it to Aussie dollars. Save my code. Now when I open up the properties menu, our base currency is set to Aussie dollars. So that's how you override your currency. What do we have next? Slippage. So slippage simulates slippage on your trades. So if I scroll down here, let's read the official description so that I'm not getting this wrong. So slippage is how many ticks to be added or subtracted from your fill price of your buy and sell market or stop orders. So this simulates slippage. So slippage is basically being filled at a worse price than you expected. It's a common occurrence, especially in Forex markets, when using market orders especially, and stop loss orders, which are converted into market orders when they're hit. So you can simulate the cost of slippage in your scripts. I personally don't play around with this myself because slippage is one of those unknown variables. It's dynamic. It's not fixed. Sometimes slippage can work in your favor and you make more than you expected to. Often it doesn't and it costs you a little bit more than you expected. Personally, I just deal with slippage in my trading. I monitor that manually because it obviously depends on the quality of your broker's execution. It's not really something you can plan for in advance unless you have a consistent slippage pattern with your broker, in which case I would suggest you find a new broker, because any broker that has a consistent slippage pattern is probably ripping you off. Slippage should be a minimal occurrence thing. It shouldn't happen that often. It should only happen during low liquidity hours, so maybe between major trading sessions. If it's happening so often that you need to use this default parameter to set your slippage, then you probably have a problem with your broker. But in saying that, let's read what it says here. Slippage in ticks to be added. So if the minimum tick is 0.01 and slippage is 5, it will multiply the minimum tick value by this slippage amount. So if I set slippage to 1 on this particular market with 5 decimal places, it would simulate slippage of 0.00001. And what that means is if my order was, my take profit order was at 1.13, if price came down and hit that take profit or stop loss, my order would actually be filled at 1.13 plus or minus the slippage simulation. And it will simulate it in the opposite direction to what we wanted. So if this is a stop loss, then my stop loss would be filled 1 tick lower than I wanted it to be. And so I'm paying 1 extra tick on top of what I expected to. And if it's a take profit, then we'll be filled 1 minimum tick below our take profit. If it's a long take profit, will be filled worse off by 1 minimum tick value. So that's slippage commission type. Let's have a look at that. Again, I don't mess around with any of these parameters in my personal scripts. I like to account for all of this manually rather than have the TradingView strategy tester simulate it for me. So we have commission type. So this is a constant string as well. So we have strategy.commission.percent. So that's a percentage of the cash volume of the order. Then you can have like a fixed amount of money per contract. And then you could have a fixed amount of money per order. So for example, I have a stock account with a stockbroker called Self Wealth. They charge me $10 or $9.95 per trade. Doesn't matter how big or small that trade is. It's a fixed per order amount. But my Forex trading broker charges me a cash amount per contract, or it might be a percentage, I'm not sure. But what it is dynamic. So if I have a large position size, so if I'm trading a lower time frame with a giant position size, I pay a lot of commission. If I have a larger position size on a higher time frame, I pay less commission because my order size is smaller. That's another reason why I like to trade the 1 hour and above time frames. Is there's less commission drag. But anyway, if you want to, you can set your commission type, the default commission type here by setting strategy.commission.control space will give you the options here. Again, I don't play with this, but if you need to, there's the parameter for you. Next, we have commission value. So that just overrides the default commission value. So if I set that to 1, actually it might be 0.01. Let me read this really quickly. Yeah, it just says commission value for an order, depending on the type selected. It includes percentage or money. So if I set this to strategy.commission.percent and set this to 1, I'm guessing this simulates 1% commission on my position size. If I set this to cash per contract and set it to 1, now it's $1 per contract that I'm paying in commission. Moving on, let's have a look at the next parameter, which is process orders on close. So process orders on close is similar to recalculate after orders are filled. What this does is when it's set to true, it generates an additional attempt to execute orders after a bar closes and strategy calculations are completed. If the orders are market orders, the broker emulator executes them before the next bars open. If the orders are conditional on price, they will only be filled if the price conditions are met. This option is useful if you wish to close positions on the current bar. So what that means is if we needed to close a position on this bar, normally what the emulator would do is if we execute an order to close on this bar, the order won't be executed until the open of the next bar. But if you needed to execute your order on the actual closing tick of this bar, you can set process orders on close to true. Now our script will attempt to close a position on the close of the bar instead of the open of the next bar. Moving on, we then have close entries rule. No idea what that is. Never heard of that before, to be honest with you. Close entries rule. Let's see what that does. Open up the documentation. This changes how the script closes our orders in terms of the order of the orders. So in other words, the allowed values here are first in, first out, or any. So first in, first out, if it's set to FIFO, which I believe it is by default, then that means that when several trades are open, the earliest trades must be closed first when you send a close command in your script. This rule applies to stocks, futures, and US Forex. I think this means your broker. So if you send a close order to your broker on stocks, futures, and US Forex, an American broker will use the first in, first out approach to close out your trades. But if you set it to any, then that means that trades may be closed in any order. And apparently this is allowed in non-US Forex. The default value is FIFO, or first in, first out. So again, this is not something I've ever played with in my own scripts because I don't use multiple positions per market. I usually only trade a one in, one out approach to keep things as simple as possible. All of my strategies, especially automated strategies or scripts I've written to help me trade strategies, use a one in, one out approach. If I'm discretionary trading, maybe I'd have multiple positions open on the same pair. But in my scripted trading, I don't use multiple orders, so this parameter is not something I've ever used before. But the way you change the rule that governs how your trades are closed out is using a string. So you can set it to FIFO, first in, first out, or you can set it to any. Those are the two options you have, and they are just a string value. Set that back to FIFO, and we'll move on to the next parameter, which is margin long. If I open up the properties tab here and hover over the little information icon, it says this is the percentage of equity required to fund long positions. So your margin requirement. So if you set this to, for example, 10, now you need at least 10% of your account balance free to account for your margin on long trades. You can also set the margin short percentage, save my script, and now we've set the margin required for long and short trades to 10% of our total equity. Next up, the next parameter we have to work with is nothing. The final parameters there are also parameters that apply to indicator functions. So explicit plot Z order changes the order of your plots. Max lines count is the maximum amount of lines you can have. Max labels is how many labels you can have. And max boxes is how many boxes you can have. All three of those are set to 50 by default, and the maximum value for those maximum lines, labels, and boxes is 500, I believe. And anyway, that is it for the strategy annotation function. These are all of the parameters we can play with relating to the strategy function. Obviously, there's a bunch more here that we can play around with, but as I've said multiple times, they also apply to indicator functions, and nearly all of those other parameters simply affect how your script plots data onto your chart. And with all that said, I'll wrap this lesson up here. And in the next lessons to come, we'll start playing around with some actual strategy code. Now that we understand how we can manipulate the default settings for our strategy scripts, we can now move on to writing actual strategy code. So I'll see you there in the next lessons to come.